Hi there, welcome to Kneppy Invest and welcome to the 30th of May 2024. One more day of autumn, or four, and then we move into winter. And within about a month or so, I'll be logging for spring and summer. That's the way it goes. If I had, and we've got about 45 minutes left in trading. Did I say that earlier? Maybe I did. And if I had to categorize today in one word, I'd say boring when it comes to announcements and weak when it comes to the market. I'm just looking at some of the indice movements, and they're all down except for all tech. So tech has had a pretty good day. Resources had a pretty bad day. So if you have most of your portfolio in mining companies, you're probably shuddering right now because your portfolio is down quite a bit. So the agenda for today's video, I'll have a look at a couple of tweets that are having a bit of a dig at Cathie Wood. Now, to be honest with you, it's really easy to have a dig at her, but she just proves time and time again that she just needs to be dug at because she just showed some impeccable timing overnight, and you'll understand why that is so when we look at one of those tweets. Then we'll have a look at the ASX Today, have a look at the best performing indices, sectors, companies, worst performing companies, and then we'll have a look at the top 5 announcements of the day. Nothing much to choose from there, but I'm really happy with the top 5 announcements. It's worked out really well. A couple of companies that did a couple raising, I'll briefly discuss those, and no really honorable mentions because today nothing much happened. I will discuss the biggest company in Australia or on the ASX. That company did come in at number 2, and it's been in the news recently because of an acquisition they want to make, and they have to jump through a lot of hoops, it seems like, to actually get that acquisition to come through. And they released a bit of an update on that acquisition today. So we'll discuss that company, which of course is BHP. If I have time, I might show you a few charts. I want to record this video in under 30 minutes, and I'm thinking of doing a fairly short answer reply video to release that on Friday morning. And I also have already recorded my top 20 holdings, and I'm not sure when I will release that, within the next week anyway. Okay, so let's have a look at these two tweets, a couple of tweets that are having a bit of a dig at Cathie Wood. That's not it, that's the ABS. Some facts about the land down under. Oh, look, do you come from land down under where 3 in 5 women are mothers? 700 meteorologists study thunder. That's me. That was just random. This was coincidence. 700 meteorologists study thunder. Well, that's sort of an oversimplification of what I do. Anyway, let's have a look at these two tweets that having a bit of a dig at Cathie Wood. And to be honest with you, she deserves it. The first one is her impeccable timing. I think bar chart even says that, impeccable timing. So Cathie Wood's ARK Invest took a position in this company called UiPath. No idea what this company does. They do have a market cap of about $10 billion. They took a position in this company yesterday, 451,000 shares at about $18. And after hours, they released their results, and the results were terrible. Well, the market thought they were terrible. I don't know because I haven't seen them. But since the stock is down almost 30% in after hours, the results must have been terrible. And that means if they sold out on open, ARK Invest sold it up, and they would have sustained a loss of over $2 million just in this one trade in one day. So I don't mind these digs at Cathie Wood because of this above comment from Quoth the Raven. Cathie Wood's ARK Invest is down 59% in the last 3 years, while the QQQ, whatever that is, I'm assuming it's some sort of S&P 500 ETF, is up 37%. This is why I don't mind people having a dig of her. In 2021, she predicted a 40% compound annual rate of return during the next 5 years and said innovation stocks were in deep value territory, which is absolutely ridiculous to say that in 2021. So that's just before interest rates started to rise. And so she had really bad timing in regards to this. My other issue with Cathie Wood and her ARK Invest is they're way too bullish. When you have a look at some of the articles, some of their research reports they have released, and I'm thinking of Tesla right now, their bear case on Tesla is most people's bull case in Tesla. That's why they think Tesla is like 99.99% undervalued, because they think Tesla will rule the world in another 5 years. They believe in like 5 years' time, there will be Tesla robo taxis all around the world. Everyone will be using them. No one will be buying cars, that sort of thing. And I did have a read of one of those reports, and it's like, this is way too bullish. You've got to have a little bit of conservatism in your forecast. It's very prudent to do that, and that's why her ARK Invest has significantly underperformed the market because they're way too bullish. And last 3 years has not been the time to invest in companies that are not profitable and may not be profitable for over a decade. And that's the sort of company they love investing in. I wonder why dogs is trending in Australia. I'm not going to click on that because it might be yucky. And Jamie Timon is trending on business and finance. He's the CEO of one of those banks, big banks, I'm pretty sure. JP Morgan or something like that. Or maybe Goldman Sachs. Let's have a look. JP Morgan. Where is it? JP Morgan. Yeah, CEO of JP Morgan. I was right. I should not have. Anyway, wonder why he's trending. Diamond says could be hell to pay if private credit sells. Hell is coming if private credit worsens. JP Morgan. Yes, he might have a point there. Anyway, that's enough in regards to tweets. And I'm going back to this ABS. 700 meteorologists. There you go. Okay. Nanovue. Well, I've given one of the companies of the day away just by this one, but let's have a look at the ASX today. And fairly weak. Most indices and sectors are down, except for discretionary, up 0.77%. So people believe that we're going to be spending more on useless items. That's how I consider discretionary, things that people just don't need. In fact, I'm thinking of buying a thing I don't need, upgrading my TV, upgrading my couch. To be honest with you, I don't need to do that, but I want to do that. And that's how I discern discretionary from staples. Discretionary things we don't need, staples things we do need, and staples down today. Just like utilities, energy, and materials. So really, the weakness in the ASX today is because of mining. In fact, all tech is up 0.38% and gold down 3.1%. So what I'll do right now is I'll have a look on the ASX 20 and I'll try to come up with, I'd say 10 companies up, 10 companies down. Most of the companies down are going to be mining companies. So Woodside, BHP, Santos, Fortescue, Rio Tinto. While WiseTech, REA Group, maybe Aristocrat, they're all up. So let's have a look. 10 up, 10 down. Well, completely wrong. 16 down, 4 up. Well, and let's have a look at those 4 companies that are up. And REA Group, Aristocrat. So I got those right. Wesfarmers, QBE, and ANZ. And it's just changed as I clicked on that. Now 5 up, 15 down. And without doubt, the worst performing companies are mining companies. Yeah, Fortescue, BHP, Woodside, Santos, Rio, all the companies I actually did mention. The 5 worst performing companies. Then we have WiseTech, which is a little bit against tech doing good today. WiseTech is down. So hopefully you're not heavily invested in mining companies just for one day. So hopefully you didn't get into mining companies yesterday for a one-day trade, and because you probably lost a lot of money, like that shorter did against Nvidia or Nvidia. Now let's have a look at the best performing companies and worst performing companies. And by percentage change, we have that company, Nanovue. So I actually did have to have a look at this company. I have heard about this company, but I had no idea what they do. And the technology is intriguing. So that company has coming in number 5, even though I did find their technology really interesting. But just because it's really interesting and intriguing technology doesn't make the company will make it in the long run. ARK Mines, the 5th best performing company, no affiliation with ARK Invest. Just want to make that sheet. ARK Mines has 0 affiliation with ARK Invest. Now I have to say that because about 3 or 4 years ago, when we went through that meme stock craze with GameStop, the ticker code of GameStop is GME, and there's a company in Australia with a ticker code GME, a mining company, pretty sure it's an exploring mining company, whose share price rallied because people, speculators, I won't call them investors, thought that was GameStop just because it had the same ticker code, GME. That is the sort of investor speculator that you are not competing, but we are dealing with right now. Yeah, right now, even now. Otherwise, nothing else on this list. Oh, Demerix is there. Yes, Demerix. I did add it to my position, Demerix, after the release of their deal with Middle East. Share price dipped to 40 cents. I said I was going to buy some shares if the share price fell to 40 cents. It fell to 40 cents and I bought some shares. And now it's up 13.8% today. So fairly happy with that. So let's have a look at by market cap. Catapult, I won't give it away there, but that company is at the top of my announcements of the day list. Step One's had a good day. There's Demerix, APM Human Services. I'm pretty sure they're still under a takeover bid. Metro Mining up 16.7%. So going against the overall trend in mining, Metro Mining is up, but they're bauxite, so maybe bauxite is doing really well. Brazilian Rare Earths is up. And what else do we have here? Airtasker. Nothing much else to really report on right now. So no big movers there. Now let's have a look at the worst performing companies. I'm assuming quite a few of these are going to be mining companies. Sierra Nevada did a couple raising, so not surprising. And otherwise, nothing much. Pretty sure Top Shelf did release an announcement, and I'm pretty sure Kneppy might have released an announcement today as well. But other than that, nothing here that's of interest. Although Medical Developments is a company I've been following for many, many years, and the share price just keeps on dropping and it's fallen again. And market cap is now $36 million. And I'm still not willing to buy shares because I just don't know about that company. Now let's have a look by market cap. And I'm assuming most of these top losers are going to be mining companies plus Mesoblast. So Genesis Minerals, Chalice Mining, Wildcat Resources, Therapeutics Company, Ioneer, 29 Metals, Copper, Ares Resources, Copper. So obviously Copper has had a bad day. So let's have a look at Copper. Where's Copper? HG1. And yeah, Copper's actually had 2 bad days in a row. So not surprising to see a few copper companies among the worst performing companies, 29 Metals and Ares Resources. I could imagine a nice little bounce in copper. So these could be short, at least short-term plays, maybe longer-term plays if you are bullish on copper. But copper's still in an uptrend. This is just a little bit of a dip in copper prices because it's been fairly bullish the last few months. Otherwise, anything else here? Nothing else here. Nothing else there. Okay. So let's get to the top announcements of the day. Only 5 on the list, no honorable mentions. However, I will briefly mention 2 capital raisings that were completed today. The first one was 3DP or Point Terra, company I do own. This is one of my only 2-story stocks, and I think there's a big chance this company does not make it. So I'm still holding shares, but my holding this company is fairly small, so I don't really care. Another placement, another couple raising, done at 3.3 cents, raising $2 million. I just don't know about this company, but I'm still a shareholder. And when you do look at the chart of this company, it's an ugly chart, an absolutely ugly chart. I'd say shareholders in this company are really bearish about the management because they just have not performed. And this company just does not perform. It seems like they're going to have a really good quarter or a really good half year and nothing happens. I'm still hoping. And it's bad to have a holding when all you have is hope. Hope is not how you invest, is not the thing you invest on. And at this point in time, all I have with Point Terra is hope. But again, my holding in this company is fairly small. And the other company I just wanted to discuss was Sierra Nevada. No, SNX, not the other one. And this share price down 37% on a capital raising, $2.6 million placement. Now, this is not surprising because when you have a look at the chart and the share price movement recently, share price of this company went on a massive run, a very short-term run, and you'd be kicking yourself if you bought yesterday or the day before and you bought at, say, 12 cents because the share price now has fallen because of this capital raising. All this done at a significant discount. So let's actually have a look at this placement. The share price was 12 cents before today. Yeah, 12 cents. And I'm assuming based off the share price, the capital raising is being done at between 7 and 8 cents, I'm going to say. So let's have a look. Between 7 and 8 cents, 5.6 cents. So that's significantly lower than where the share price is right now. So I can understand why the share price has significantly fallen because that discount was pretty significant to the last trading price. Now, not a significant discount to the 5-day or 15-day VWAP, which is how they will probably justify it. Let's have a look. Yeah, they use a 10-day volume weighted or VWAP So only at 23.6%. I'm surprised I didn't use maybe a 20-day VWAP and a 53.3% discount to the last trade price. So way off on that. So not surprising share price has dropped a lot, and it could have dropped even more than 37% because a 50% discount. But this is exactly what management should do. When share price goes on a run, do a capital raising, and they've done that. So I can't blame management for this company because they're burning through cash. They're a mining exploring company. You have to raise capital time and time and time and time again. Okay, so let's get to the top 5 announcements of the day, starting with that company that I gave away, Nanovue, up 36.4%. This could have been higher on the list, to be honest with you, but this is more of a story stock. I'm assuming this is a story stock. One thing I didn't have a look at is their most recent Appendix 4C. There it is. Does this company have any receipts? $9,000 in receipts. There you go. So I will not call this company anything other than a story stock. And when you do read their technology, I have not done any research on this company until I saw this announcement today. So this major iFly 3D Korean distribution. Then they released another announcement at 10:50 a.m. So 2 announcements today. So I'll just open up this second one. I had no idea what this company does. And here it is. So the technology is called iFly 3D, which again means nothing. Proprietary film and software combination that allows users to experience 3D without the need for glasses on everyday mobile handheld devices and other digital displays. That actually does sound absolutely fascinating and intriguing. So possibly this should be higher up on the list because this technology sounds amazing. I want this technology to absolutely work. And if it does work, this company could be a great investment. So platform transforms 2D images, I like their graphics on the right here, on regular digital displays into compelling 3D content without the need for special glasses. I'm just like, wow, this sounds absolutely amazing. Absolutely amazing. And this is a presentation. Yeah, so I didn't actually read this one. The one I did open up was the first one, released at 9:49 a.m., just before I went away for the day. And they do have some numbers in this. So typically, if a company releases this sort of announcement, I tend to not be that induced by it because a lot of times they don't have numbers. But this has numbers in it, which intrigues me further. Now, the number that does intrigue me is minimum order totaling 29.6 million Australian dollars, but it's just the time period by 31st of December 2026. So that's over 2 years away to generate $29 million in orders. So I'm not sure how successful this technology is going to be. I'm hoping it will be great. And if it is great, the share price, you'll see that in the chart. You'll see the share price starting to move up. Share price will move into an uptrend. And that's when I will take a position. But in saying all that, I have a feeling the chart is going to look a little bit disappointing today, even though the share price is up 37%, because the share price right now is at the low of the day. That's not a good sign. Really big volume coming in today. In fact, huge volume. Let's go back to this trade history. 81 million shares traded today. Yesterday, they went into trading halt. Previous day, trading day, they only traded 257,000 shares on that day. Share price rallied 22% on the day. Loose lips. Maybe that's why they went into trading halt, because I was a bit concerned because the share price rallied a fair bit on the day. Not much volume. So there could be the possibility someone knew this was going to happen and they bought some shares sneakily on the market. It wouldn't surprise me. That happens a lot. But not a lot of shares traded. So massive volume coming in for this company today. So definitely, in my opinion, a company to put on your watch list just because their technology sounds absolutely amazing. And I just hope they make it. So let's have a look at the numbers again. So initial cash deposit of $770,000 American dollars has been received from an initial order of $372,000 US dollars. 28,000 iFly 3D screens to be supplied for Android and Apple iPhones from initial order. Oh, there's some graphics again. I'm just intrigued by this technology, but doesn't mean, again, this technology will succeed. Doesn't mean this company will succeed. Just because it's awesome doesn't mean the world think it's awesome. So that's coming in number 5. We have Nanovue Limited. Definitely a company to maybe put on your watch list and have a look to see how well this company moves, or performs in the next few years, and if the share price starts to go up, maybe this could be a longer term trade. Coming in number 4, we have another tech company called XReality Group. Used to be called Skydive Group or something like that, and they still have that part of the business, but they're going into XReality, or what do you call it, virtual reality, and what's the other one's called? I forget. Anyway, they did release an announcement today that did almost cause a little bit of not a heart tremor, caused a little bit of excitement in me. Operator XR sales update. And let's just have a look at this company's last Appendix 4C. Pretty sure this company has been operating cash flow and free cash flow positive on occasion. On occasion. And when we go back to this one, I have a feeling they weren't on this particular quarter. Yeah, they weren't. So receipts, this company is generating receipts. I'm pretty sure that's the Skydive. I'm pretty sure they still have it. Let's have a look. I'm pretty sure they do. Let's have a look at the about section. So leaders in enterprise software development, and okay, so portfolio companies include indoor skydiving facilities. They still have that virtual reality and augmented reality. That's one I was thinking of. Entertainment, training, and production. I don't care about indoor skydiving. I'd only care about the virtual reality and augmented reality. And they also provide services to military and law enforcement. Anyway, so not quite operating cash flow, free cash flow positive in the last quarter, but the company has been free cash flow positive in the past. But let's have a look at this operator XR. So sales of $1.93 million in the month. So that's a really good growth from what this company has been experiencing. 12 new customers, one during the month. That's intriguing as well. Second Australian Defence Force sale. So their customer, one of their customers should be a very sticky customer, you would think. Year-to-date contract value increased 261% to 2.66 million. And recurring revenue, I don't really care about that, 1.26 million. I'm pretty sure they have some graphs in here. So annual recurring revenue has grown significantly. Total contract value is just exploding over the last few months. Now, whether this is just a one-off in May or they can continue this would be important. If this is just a one-off and next month we see not much contract value added, that would be maybe a little bit concerning. Now, the market hasn't really taken interest to this company today. I thought it would have been, share price would have been a little bit stronger, but let's have a look at the chart. And, actually, I don't mind this chart. A few reasons why I don't mind this chart. The share price at 4 cents is right at the top at the last high in February, and not quite a 6-month high. It is a 6-month high. Yeah, it's just at a 6-month high today, because last time share price was this high was back in October last year, which is more than 6 months away. The other thing I really like here is a lot of volume coming in February through to April, a bit of a dry up in volume. Now we're starting to see volume expand again. And that's a good sign moving forward. So another company to put on a watch list. So Nanovue and XRG, or XReality Group, are two intriguing companies. And I do like how this company has really, what's the word? Their momentum in the past month. I do like this company's momentum. And the very fact that the market hasn't really taken interest to this company just yet on a widespread scale. I was going to say whole scale, on a widespread scale. It's still in there meekly. And market cap of this company is not that high, only $20 million. All right. So that's XRG, or XReality Group. I'm pretty sure I do have this company in my watch list. Pretty sure I do. It's in IT tech and software. Coming in at number 3, we have GR Engineering. They did release a little guidance update. Share price down 4%. So obviously this guidance update is a little bit negative. There was one negative thing I did find in this announcement, and that was the upgraded revenue, which was down. So revenue guidance has been reduced from 415 to 430 million, which was a significant decrease from their expected 500 to 530 million. EBITDA expected to be between 50 and 51 million. Last year was 44.4 million. Not sure if they did release EBITDA guidance before. I would expect if they did, with that reduction in revenue, that maybe EBITDA was down from their previous expectations, which would mean this was a profit downgrade. But Other than that, it was a slightly negative announcement, and that's why the share price is down 4%. Now, this company has been a bit of a, I wouldn't say a market darling, and just based off the chart here, the chart is starting to look a little bit bearish, particularly after today. Starting to look a little bit bearish, but if we have a look at the weekly chart, you'll notice the share price wasn't, oh, damn you, Trading View. I'm going to have to do auto fit. There we go. So if you do look at the weekly chart, the share price is, and probably you could say and argue, is still in a long-term uptrend. So this uptrend started in the middle towards the end of 2020. Share price was about $1, and it's still in the uptrend. But definitely the uptrend looks much weaker than it was back in 2021 and 2022. And all you have to do is put a line right here. That's a resistance zone right there at 240. And you could say the longer term moving average channel here is a support area. It's been shown that last 2 times it got into this area, and it's right there now. But otherwise, a little bit of a weak announcement. Chart is not that strong. So a company that I've had on my radar for the last few years, and at this point in time, maybe not. Coming in number 2, we have BHP. Pretty sure I hinted this earlier in the video. They released another update regarding a proposal for Anglo American. I did not even open up this update. In fact, they released one at the end of training yesterday, another one. So what's happening now with Anglo American? I heard that BHP confirms it does not intend to make a firm offer for Anglo American. Okay. Okay, so looks like this takeover bid will not be going through now. Based off this, the revised proposal was rejected. I did hear if this was rejected, BHP would have to come back if they wanted to make another bid for another 6 months or something like that. So this particular takeover bid is not going through. And to be honest with you, I think that's not a bad thing. BHP has had a history of really bad acquisitions in the past. In fact, Billiton is a really bad acquisition this company made. So let's have a look at the chart. Now, overall, the mining sector has been weak today, and the weekly chart for BHP actually still looks pretty good. But if you look at the daily chart, share price is just going sideways. It's been going sideways for the last 2 years, since October 2022. And right now, the share price is more towards the bottom of the trading range than the top. Now, if the share price fell below $42, that would be very bearish. And BHP share price right now at $44.34. So still way off that bottom of the trading range, but still looks bearish. Looks a bit bearish right now. But again, share price of BHP is going to be highly influenced by iron ore. If iron ore absolutely tanks it, BHP share price will tank. If iron ore doubles from here, BHP share price will increase from here. So don't necessarily listen to those people who say BHP is a diversified miner. Sure, they are in terms of what they mine, but in terms of the movement in the share price, BHP is highly correlated to iron ore. It is by far the most important commodity this company mines. By far, I'm pretty sure it's by far. All you have to do is just overlay iron ore prices on top of BHP share price, and there is a pretty good correlation there. Coming in number 2, we have BHP. Now, coming in, the top announcement of the day is a company I used to own. Not anymore. Would I say I'm kicking myself? Not necessarily so. This is Catapult. They released their results today. Financial year results up 10%. It was up a little bit higher, up about 15% at one point today. And the chart actually does look pretty good. Now, I just don't know about this company. It's a company you'd think would be fairly successful in terms of profitability because sports teams all throughout the world use their products. In fact, I've heard Catapult mentioned on American podcasts, a sporting podcast. Yes, I have heard this name mentioned, and I think the context was I saw this team training, and they had those Catapult things on their body, that sort of thing. So it's just really intriguing to hear the name Catapult mentioned in an American sporting podcast. But that's what they do. And it's just surprising the name this company has, they're not profitable just yet. However, they might be profitable now. So profit margin increased 125% year on year, resulting in $4.6 million free cash flow. I'm going to open up their financial statements because I haven't actually had a look at this yet. And of course, I'm opening this up via ComSec. So it's going to take a while. Company hit a milestone revenue mark of $100 million US, up 20%. That's not one of the problems this company has, revenue increase. It's just they've made some pivots in their business, pivoting in a certain direction, and they should have done that. They should have just concentrated on their strengths. And if they just concentrated on their strengths, this company would probably be much bigger than they are right now. But it does seem like they are free cash flow positive. And hopefully this announcement is opened up there. And we have a sporting team on the front page with their Catapult thingy. And I'm just going to have a very quick look at their financial statements. So it should be notes. So it's a little bit up from there. Oh, still up the notes. Where is it? There where it is. I can see it right there. Remuneration report. There it is. So revenue, $100 million. So they report in US dollars. $100 million, but they're not profitable. Okay. So still loss making. And I assume based off, so other expenses, 8.7 million. I'm trying to see why they're loss making. Employee share-based payment expense, 9.7 million. Oh, one of the things I hate about American companies is employee share-based payment expenses. I hate it because some of those companies are stupid when it comes to employee share-based payments. They're just way too extreme. And that's one of the reasons why a lot of companies in America are loss-making, because of their employee share-based payment schemes. Ridiculous. I'm so happy we don't have that in Australia. Anyway, still loss-making by a fair bit, but I don't think the market is thinking about that. Let's have a look at the total equity, $78 million equity. Do they have borrowings? They do have debt, a little bit of debt, and nice, okay cash. But let's have a look at the cash flow. They did say they're cash flow positive or free cash flow positive. Let's see if they are. So operating cash flow positive, 31.7 million, a big difference from their profitability. So go to note 29 in a second, and payments for property, plant, and equipment, 10.4 million. So they are free cash flow positive. Payments for intangibles, whatever that is, I have no idea. So we'll take that away from operations, and they were operating cash flow, free cash flow positive by about $4 or $5 million. So they actually are right. But just because they are operating cash flow and free cash flow positive doesn't necessarily mean anything. So I'm going to note 29. This should be a reconciliation of profit to operating cash flow. Let's have a look at it. Yes, it is. Reconciliation of loss after income tax to net cash from operating activities. We can actually see why there's a big difference between the loss and the operating cash flow. So for instance, depreciation and amortization, 24.2 million. Share-based payments, 9.7 million, which is a big difference. So you do have to take that into account, because instead of paying people, they're giving them shares. What else? Increase in other provisions. What does that mean? 8.3 million. That's a significant increase in other provisions. 8.3 million. What is it? So it's really only depreciation and amortization, share-based payments, and increase in other provisions is the reason why there's a big difference between the profit or the loss and the operating cash flow. So it's not quite as good as 31.7 million operating cash flow. So let's have a look at the chart. Chart does look good though. And this is a possible sneaky buy, sneaky breakout. Catapult, where are you? Catapult. So share price has been an uptrend. So there's me taking a position in Catapult back in June last year. Should have maintained a position. I sold at a nice little profit, but I should have just maintained a position. That's me being a little bit too impatient with this company. Now, today was a potential breakout, but the candlestick is a little bit weak. Now, the share price is right at the highs we saw about a month ago, back in April. So it needs to stay above that for me to consider this a breakout. But the chart does look pretty good for Catapult. It does look good. I will give the company that. Okay, that's all I got for this video. It's gone a little bit longer than I expected, so no charts. So if you do have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.